Coming up, what happened last year in 2025 and what we're going to expect in 2026.
Welcome to Farm Truck Financial, where wisdom and wealth ride shotgun. Join Eric Kearney, president of Retirement Wealth Advisors, who believes that the best kind of planning happens when 4 tires hit the road. So hop in. Today, we're talking about investment strategies that drive results.
Farm Truck Financial, we're riding with you.
And welcome everybody to Farm Truck Financial. My name is Eric Kearney, president of Retirement Wealth Advisors, and today I am joined with Joseph Lanza, investment advisor with Retirement Wealth. Hey, Joey.
Hey, how are you?
I'm great. How are you?
Thanks for having me. Excited to be here.
Thanks for being here again. You know, we've got so much to talk about today. We are going to look back into 2025, see what happened then, jump into 2026, and then I want to go over like an investor checklist of how to get through all of these crazy times. So let's go back to 2025, kind of a crazy year, actually.
Absolutely. It wasn't an easy year, but you know, I was talking to a client recently and I thought to myself, what year has been an easy year for an investor, right? You're always going to have volatility. You're always going to have some event that comes along. And it's like what we say with each other all the time. It's just a matter of when, not if a certain event happens.
Right.
It's just the next thing, the next headline that you may see when it comes along.
Yeah.
I think if there is 2 letters that go together to explain 2025 the best, it would probably be AI, maybe.
Lord. Oh,
I mean,
Lord.
if you thought, I remember back in 2023, Eric and I, you know, talking about AI and investing. We got to a certain point, probably about the summer of 2023, where we were like, man, we were tired of hearing about AI and investing. If you thought you were tired back then, geez, last year was just insane. I mean, explosion, right? With all these companies, you know, you saw the amount of times AI was used in earning calls in 2025, and all these companies that you would never expect. I even heard stories from clients of these small businesses that they know starting to use AI. Somebody that sold fishing lures, and they're using AI to expand their business, like things that you wouldn't have expected, but it just shows all the different uses and how these people can implement it into their businesses, make it more efficient.
Right.
I think something that's on a lot of people's minds too is they're scared thinking about AI coming into the businesses
it's
and
change,
things. And,
right? Nobody likes change.
right. But if we think back to when computers were first starting to come out and how that's going to take over so many jobs. And you can argue that it did take over some jobs, but really it also expanded on a lot of jobs. And it was those individuals that couldn't adapt to that evolvement, to using that computer, that I think struggled the most. So I think we're going to see the same thing with AI in the future, as well as it's meant to make your business more efficient. Of course, it's meant to make companies more profitable. I don't think the main goal is to get rid of jobs, but I think it will light a fire under certain employees, say, hey, we have to adapt to this new technology that's coming along.
Yeah, and sometimes it feels a little 1999-ish, if you will, you know, where all of a sudden everybody's paying attention to AI. You can't invest in anything else except AI, AI. You even had companies that were changing their name to, oh, so-and-so AI. And now all of a sudden everybody's like, oh, pay attention to that one because they're involved in AI. It's kind of crazy. And like, even though there is this gold rush, right? I mean, there is this huge rush for all these companies to become so AI driven, all the market cap that's being spent. I mean, it's unbelievable how much money these companies are spending on this. Yeah. But at the same time, you know, it is a massive part of our GDP. I mean, in 2025, we saw where AI was a massive part of our GDP, and that's actually significantly rising. I think one of the biggest things is there is an AI race against China. Let's face it. Absolutely. I mean, there's a lot of other countries that are in this AI race, but really it is with China, with chips and technology, energy, and there's a lot of different things going on.
Yeah, you mentioned the GDP. Looking into 2026, it's estimated to equate for about 20% of our GDP will be AI related.
Right.
1/5 of our GDP heading into 2026 is supposed to hit that number. And we're looking at trillions of dollars now that were spent in 2025 on AI. So, you know, you can make the comparison. People will say, how do we know this isn't another 99 that's going on? One, we do have a lot of capital expenditures, money that these companies are investing into AI that's keeping this fueled and going. I do think something that's going to be on people's radars for 26 is how long is it going to take for some of those investments to start paying off internally for that company, right? You can name any of the Magnificent Seven that are starting to invest in those different AI data centers or procedures that they have, but how long is it going to take for them to have that actual rate of return on there? And I think investors can kind of start to get, internal investors in those companies too, can start to get a little bit twitchy, if you will, of, okay, when are we going to start to see, we've been putting billions and billions away into this. When can we start to see that? I think that's going to be on everybody's radar for 2026 for sure.
I agree. Let's talk about the economy. The economy in 2025, a little weird. We still have a very strong domestic economy, but a little bit slower. But I think what we're always doing is comparing it to Europe and also Asia. But our economy was pretty good throughout 2025.
Yeah, absolutely. I think you remember in quarter one, when we had that, all the reports started coming out, when all the tariffs started coming out, it's like, here it is. Here's the recession that everybody was planning for in 2022. It's about to happen. And then it didn't, right? And I feel like this is just a repeating cause that's happening with analysts in the U.S. economy. And there's a stat line here, and I know Eric doesn't like when I get too involved with my numbers here, but I have to say it because this is just crazy. Economists predicted a recession 93% of the months between 2022 and 2025, and it never happened.
Yeah.
Right? So over that 3-year period, 93% of those months, there's economists that were saying there's going to be a recession. That never happened. Now, I'm not saying that, a recession is never going to happen in the future and that, it shouldn't be something that's on the radar. Of course it should, but it just goes to show that it doesn't necessarily mean that these analysts are always right.
Right.
Right. And I mean, and heading into 2026, we're still looking very positive as far as our economic expansion. It's slowed. Don't get me wrong. It has slowed, but now interest rates coming down, that's going to be favorable. And I still think we're going to have that solid growth heading into 2026.
Yeah. So let's talk about that. We're going to take a quick break. When we come back, what we're actually seeing and looking at for 2026. Stay tuned.
Do you have questions and concerns about your money, lifestyle, and retirement? Like so many, investors today worry about living expenses, healthcare costs, inflation, and stock market volatility. Instead of worrying, start planning. Eric Kearney and his team at Retirement Wealth Advisors want to sit down, get to know you, and start to build a plan that matches your vision and goals. Let's have a real conversation about what's important to you and how we get there. We'll help build you a plan based on your goals, lifestyle, and income needs, with financial clarity over complexity. Call us today for a farm fresh second opinion. Remember, you only retire once, so let's get it right the first time.
And welcome back. And so right now we're talking about 2025, what happened, and then looking forward into 2026. So Joseph, we cannot forget about the tariffs in 2025. What a mess that made earlier in the year with the markets.
Yeah, I think everybody expected it to have such a much more longer term effect on the economy, on the market. You saw massive volatility, massive pullbacks, but then you saw, that recovery process that took place. Many of those tariffs were paused. Many of them may have been absorbed from the company as well. But I mean, that first quarter of the year, even a little bit into that second quarter, that was all the news headlines, right? Even if you aren't watching the news or a financial related market, that's all you saw across your headline. Turmoil in the markets, this is happening, the tariffs are coming in. And now we've moved so far past that. And it's kind of like what we talked about before. We've had these discussions with all these different market events that have happened, right? Where something drastic happens. Everybody thinks it's the end of the world with their portfolio, with the market, with the U.S. economy. And then sometimes in 3 to 6 months, it's like, nobody's talking about that anymore, right? We've talked about it with Brexit, with the COVID pullbacks, 2022. You can name all of them, but people eventually start to forget about these things. I think the market does the same thing where it does eventually move past that.
Yeah, I mean, we move past it, and then all of a sudden the market comes right back up, right? And that's exactly what happened. And then we move into a government shutdown, right? And this is what drives me crazy. So we have clients that get political. They're on this side or this side. I don't really care, right? We have to manage money according to what's going on. And that whole shutdown really irritated me because people are blaming both sides, but these are elected officials that we elect that are driving me crazy because they can't grow up and get the government open again. And we are suffering. The market suffered. And when they finally reopened, did the market shoot through the roof? No, it's because it was so damn delayed last year. So that was really a nightmare. And what would you say about another government shutdown being possible for 2026?
I think it's on the table. I definitely think that it is on the table. I mean, there was a lot of the things that weren't necessarily resolved in that initial bill that they came to agreement on. So I think that that's going to be on the radar is more funding debates, another possible shutdown. And I hope that these elected officials who, again, another point to that is their job is to represent
Us,
right?
yeah.
The American people. I hope that they're taking this time to be proactive, to kind of get ahead of the ball. And don't be behind, but be ahead and say,
Right.
hey, before this thing goes into another shutdown, let's not have that happen again. Let's get certain things in place so we don't have to experience that again.
Yeah, I agree. So let's talk about the next thing, the Fed, and we're also going to talk about inflation because it is still a nightmare. So the crazy thing about inflation is I am 25 years in this business. Never before in the past 23 years prior did I ever talk about inflation so much, but it is insane. It is wreaking havoc in our daily life. It is wreaking havoc in housing. It is wreaking havoc in healthcare, long-term care, pharmaceuticals. Healthcare is one thing that's a huge problem in retirement, but this inflation thing, I don't think that there's enough people that have this prepared for them.
No, and I think it's going to be a problem that is going to be much stickier for longer. I think this higher inflation is just going to become a newer norm. You know, the Fed just started cutting interest rates, and they've been cutting, and they kind of forgot about that whole 2% target that they had. Now it really feels like, oh, it's a 3% target.
Yeah.
And I think that it's great that the Fed is cutting rates for the equity markets. It's going to make the portfolios a lot stronger, and those equities can have a lot of a bigger profit margin, if you will. But it also means if consumer spending starts going up, with typically when you lower interest rates, that happens. Inflation is just going to be stickier for longer. It's going to remain those higher levels. So to your point, if you're entering into retirement, this is why it's so important to have that financial plan, have that income plan, and making sure that inflation is factored in there.
Yeah. What's interesting is I go back 25 years, and 25 years ago, retirement was different. But people that wanted to retire still had the same goals, objectives. They didn't want to run out of money. They wanted to make sure that they could live the life that they really wanted. But today, you have more geopolitical risk. You have volatility, you have inflation. The financial ecosystem that surrounds us has significantly changed over the last 2.5 decades. That's really what we have to plan for. And so market volatility is now the new norm. That became the new norm 5 and 10 years ago. Now, all of a sudden, inflation is the new norm. It's going to be sticking with us for quite some time. And even we see a lot of things that went up in prices. Those prices, we've talked about this many times, those prices are not necessarily coming down.
No. And that just becomes that new norm for individuals, right? I get shocked every time I go to the store and I see a 12-pack of canned soda. $10 for 12 cans of soda. And it feels like yesterday it just slaps in the face like, wait, that used to be $4. Like, when did that happen? But to your point, even though inflation may be coming down, we're talking about the year over year change in inflation. Once those prices reach that certain point, it's not like the price is actually coming down. It's just that they're not going to go up as fast anymore. Exactly. And so I think that's wreaking havoc in a lot of retirees' plans.
I agree. So coming up next, whether it's market volatility, it is inflation, or you have income issues, let's go over an investor checklist of what we can actually do, how we can plan for that. So stay tuned. We got a little more coming your way.
You know who has one of the toughest retirements? Procrastinators. You keep telling yourself, yeah, I'm going to get to that. But after months turn into years, you realize that time is one investment you can't buy back. The earlier you start, the longer your money works for you. Stop letting someday steal your future. The best time to start was yesterday. The next best time is right now. Don't let procrastination be the reason you work longer and retire smaller. Call us today for a complimentary review of your finances. And remember, you only retire once. So let's get it right the first time.
And we are back. So we were just talking about 2026, what we can expect this year. The one thing that we didn't talk about is midterms. I mean, huge, because people really get into politics and they think, oh, midterms are coming up. And people actually stop planning. They stop thinking about their future because, well, we want to see what happens with midterms. You know, we want to see what happens with the economy. We want to wait till after the holidays. We want to see who gets elected. It doesn't matter. Like, start planning now. Like, that's the point of planning, is to get through difficult times.
I think it's one of the biggest traps is I'm waiting for things to calm down before I do anything. Yeah. Because what is your definition of calming down? When is that action going to actually take place? Oh, I'm waiting for a pullback. Well, a pullback of how much? Right. A lot of times what happens is when you have that mindset, it's really just procrastination. And if you wait for things to calm down before you do something, you end up missing the boat. You end up missing those opportunities.
Yeah, and there's a lot of people who are like, I'm going to wait. Actually, our more successful clients are like, let's plan for this. So if we have a recession, how can I take advantage of that? What opportunities do I have? How can I actually get through this and benefit from this? That's what I like. How do we actually combat a situation? Well, it's a lot of times through financial planning, income planning, portfolio money management, but you want to have proactive planning happen. And I think a lot of people, when they get emotional, they get more reactive, which drives me crazy because our brains, right? I mean, we are kind of wired to be aware of uncertainty, loss, and we don't like that. And as a matter of fact, our brains do not eliminate fear. It actually intensifies it. And when we get intensified with fear, we get very emotional. And that's where we get reactional instead of strategic. And so like, it doesn't matter if it's midterms, recessions, or whatever, we have to be more strategic. Let's go over what has changed this year and go through like an investor checklist of how we can actually get through this.
I think something that's on the top of everybody's mind heading into 2026, maybe not as much investor related, but especially for retirees, is healthcare costs, Medicare premiums. It kind of makes me laugh because you see Medicare premiums are going up by over 10%. That baseline of $185 for Medicare Part B is now going up to, I believe it's $209 and change per month, which is over a 10% increase. Then you see the cost of living adjustment for Social Security is a 2.7% increase.
Right,
so,
1 quarter.
Here's 2.7% increase on your Social Security, but your premiums are 10% higher over here. In the private healthcare market, it's even worse, right? I think the average for the private healthcare is 18%. That it's going to be rising by next year?
I think that's low. I know that my premiums went up over 20% from 2025 to 2026. I almost fell on the floor. I thought it was a mistake. And then all of a sudden, it does get overwhelming. You have to go through everything. Okay, well, if I change this, how am I covered? Medicare is no different. And we've done a lot of podcasts with Carmela Rose. And if you look on our podcast, you can actually go back and she talks all about Medicare, which has been very helpful for a lot of people because it is a confusing and overwhelming situation. So let's move on. We've got healthcare. What about tax law changes?
Yeah, the big, beautiful bill came along and that had some changes to it too. Some things to look out for the next year as far as tax credits that you can have and different strategic ways that you can take advantage of that bill. But something else before we wrap up that I do want to bring up too is contribution limits are changing. It's always good to take care of at the beginning of the year in January. If you're making automatic contributions to your 401k, your IRAs, your Roth, be aware that these numbers are going up. So if you're under 50, in 2025, it was $7,000 that you can contribute to that IRA or that Roth account. That is now moving to $7,500. Same thing if you're over 50, it was $8,000 before. Now it's moving to $8,500. The 401k contributions are also going up. I don't want to get this wrong, so that's why I'm looking down. Now it's moving up to $24,500 for the employee part of that contribution, and then as well as the catch-up provision will increase there too. So the reason we bring that up is take care of it at the beginning of the year. If you're having monthly contributions that are going in, increase those slightly, especially when we're looking for those Roth accounts, maximizing those tax efficiencies from those accounts.
Absolutely. So again, we have to realize, where we're coming from, where we're going, and where are we right now. And you have to understand that no matter what the issues out there are, they're always going to be changing. And we can't always worry about a recession or what if scenarios. It's not if a recession is going to happen. It's just when it's going to happen. But remember, in 2020, we actually had a recession, but we also had a market where the S&P 500 returned 18.57%. In the same year that you have a recession, which is scary, right? You still have a super strong economy. So again, it doesn't matter what event takes place. You have to factor in inflation, healthcare inflation, volatility, income, and also focus on growth. So if you have questions about your retirement, give us a call today. And again, I appreciate you coming on the show, Joseph. There's so much information. Yeah, it's always a lot of fun and time flies by, that's for sure. So everybody out there, if you're looking for that farm fresh second opinion, go to farmtruckfinancial.com and we will see you on the back roads of retirement.
Thanks for riding along with us today. We hope you got some good dirt. If you liked today's show, subscribe, like, and share with all your farm truck friends. We hope you'll join us for the next ride on Farm Truck Financial, where we're always planting seeds for a better future, 1 mile, $1 at a time.
Farm Truck Financial, we're riding with you down the back road steady.